Some of the biggest changes we've seen in the IG market over the past few weeks has just been a massive change in terms of sentiment. So when we reached the wides on the index OAS, the bearish sentiment was pretty much consensus. And recently, with the better inflation data in November, we saw that sentiment turn around and buying come back into our market as folks saw that as an opportunity to buy credit at levels that they hadn't seen in all of 2022, at least from a spread perspective. And then from there, the new issue market turned around and actually turned on, and then new issues performed pretty well. And when you saw that momentum kick in, more buying happened. Some of the triple Bs in our market looked cheap relative to other spaces, particularly high yield, and you saw a bid for beta, and all of that led to a snowball effect where we just saw a significant rally over the past month or so. I think right now we're at a somewhat of an inflection point given the significant rally we've seen over the past month. That being said, market participants are definitely feeling better than they were coming into November. Some of the major drivers that could affect the IG market between now and year end really revolve around technicals. The end of the year tends to be a lower supply period, given all the holidays that we have coming up. So if managers have money to put to work, they're forced to look at secondary offerings. And sometimes you get a strong, what they call a Santa rally, but just a technically driven rally that could last into year end. January is one of the bigger supply months, so eyes will be ahead for that, but usually we're well prepared for the increase in issuance. But going into year end, we could see the market continue to grind tighter. The IG new issue market is more normal in terms of the amount of supply we received, especially compared to an abnormal year in 2020, which is the highest year on record. But what we've seen is more fits and starts in the new issue market, where we've seen bouts of volatility in overall credit. You've seen the new issue market come to a complete halt. And then when things have improved and we've seen spreads tighten or periods where yields came down, you see more issuance and really almost like an avalanche. So it's different in that respect to where other years it was more smooth. And from week to week, we have days or weeks sometimes in 2022 where we've seen no issuance and a lot of what they call stand down days. And then a week where we may get 45 to 50 billion in 2 to 3 days. So it's different in that regards. But the other big thing is concessions. So we've seen concessions increase in 2022 relative to previous years. They're about 2 times higher than they were in previous years. So higher cost to clear new debt for issuers, but that sometimes has provided opportunities for investors.